Welcome, ladies and gentlemen, to Commodity TV and a new episode of our online interview series today from Austria. And you see it already, it's totally hot. I'm melting away. But anyway, we have to talk now about copper, gold in Brazil. And we want to talk to Meridian Mining. And we have Gilbert Clark here, the CEO. Thanks for taking the time, Gilbert. How are you?
I'm well, Joachim. We are also having a sterling summer here in the Alps, right?
Super. That's perfect. So you are in London, or where are you today?
No, I'm up at my wife's family's little chalet up in the Alps, in the Southern Alps.
Super. Oh, that's good. Perfect.
Lovely.
Fantastic. Super. So I'm in Austria, and I said we're 35 degrees. It's crazy, but I love it. Well, the markets look really interesting. Copper looks even more interesting, I must say. But before we start to go in medias res, please give us a short overview on Meridian Mining, please.
Sure. So Meridian Mining is an English company. We are listed on the Toronto Stock Exchange in the OTCQX and in Frankfurt. We are developing a copper gold project in Mato Grosso in Brazil, southern Brazil. It is one of the most interesting things I've ever come across in my nearly 25 years of mining investments. It's an entire copper gold belt that was essentially hidden from the digital age in the archives of Rio Tinto and then a private company. When we started the journey back in 2020 with Cabaçal, we had a share registry that was almost entirely retail. And since we've brought Cabaçal into the portfolio, our share registry has changed from being almost 100% retail to nearly 65% long-only world funds and high net worth. So there's a real interest in this company to take it into production.
Mm-hmm. Okay, super. So let's cover side. You also have the Santa Elena mine, so let's do that secondly. But as you said already, you want to bring that sense into production. I think you have also some very interesting economic numbers on that, right?
Yeah, when we did the PEA, released it in March of last year. We didn't do the typical small cap promote on speculative commodity numbers. We use banking base case numbers. So gold at $1,650 US an ounce and copper at $3.59. But using those long-term, at the time long-term commodity prices, we still generated an after-tax NPV of 573 million USD, an IRR of 58.4%. And because of the geometry and the fantastic metallurgy of the deposit, our payback's in just under 11 months. The capex is only 180 million USD, including contingencies. But just thinking, using 1650 gold and 359 copper, we still generated life of mine revenue of 2.9 billion. So if you factor in 2,300 gold and $4.50 copper, the revenue just explodes. So that's because it's a VMS belt, that's the hub. And everything, all the other deposits that we've got of 50 kilometers of tenure, they're all going to feed into that central mill.
Okay. So you said it's a huge VMS. What makes that VMS so special in the one sense? Because I think those numbers, even if it's a PEA only, but as you said already, 1650 gold and 359 for copper is extremely conservative in today's numbers, of course. So what makes that so special itself, and how do you want to move on now with the development?
It's a really interesting question. One of the keys in truly economic VMS belts, they always start out as open pit. And open pit development is generally low capex because you don't have to build a shaft or do kilometers on underground development. So, and our mineralization is at the surface. So that's the key, low capex to actually access the mineralization. Now, then on top of that, if you're building a mill and you've got very complex metallurgy, the mill's got to be very large and yet it's difficult to get your payables. But with Cabaçal, the metallurgy is for a volcanic massive sulfide belt, VMS, I think we've almost reset the pier. We've reset the baseline of what is good metallurgy. It's incredibly coarse grind, very quick to flow, and there's no impurities. So it's very good to recover copper and gold in a project. But we're going to do it quickly, cheaply, and have no impurities. So there's no penalty when we go to sell our concentrate.
Uh-huh.
Yeah.
Okay,
But
fantastic.
Johan, just
Yeah.
on that, what's good about this concentrate is it's very high grade. So when the smelters, the copper smelters, be they in Germany, Japan, China,
Hmm.
they
Hmm.
can buy a high grade, clean concentrate. They pay good money for that. But if they're going to buy a dirty concentrate, they pay a discount. So what this
Hmm.
means is with our concentrates, our copper, gold, silver concentrates, they can blend it. It's very important.
Uh-huh.
Yeah, it's
Okay.
really one of the most intriguing investments that I've ever had the benefit to
Yeah.
manage.
Okay, super. So it's a win-win situation for the buyer and for you, of course.
Of course.
Okay, so I saw in your presentation pre-feasibility study. What is the status there? When do you think you can bring that?
Well, we have announced to the market that'll be early Q1 of next year.
Hmm. Hmm.
We have done in the project had approximately 75,000 meters of drilling, of which we've been able to use about 55,000. We've done an additional 50,000 meters of drilling. So that drill hole database for the PFS is completed. Now we're doing the detailed engineering studies. We're doing the geotechnical studies for the waste dumps. We're doing geotechnical drilling for the where the mill is going to be, because you've got to have good rock. If you're going to build hard assets, you've got to
Hmm.
have good rock to build them on, and we've got very good rock. So
Hmm.
we're using Asenco. It's an
Hmm.
international
Yeah.
engineering firm. They've recently been associated with several mine builds in Brazil. So again, it's taking away that risk associated with advancing a what we think is a very
Hmm.
advanced stage project already.
Hmm. And how is the situation, let's call it, with yeah, the heavy infrastructure like power supply, like roads, transportation, etc.? What's the situation there?
Well, we really benefit because Cabaçal was only discovered in 1983, and for a very short
Hmm.
period, from 86 to 91, BP Minerals, then Rio Tinto, operated a small underground gold mine there. But they built concrete bridges, all weather roads, and we've actually got two power easements to site. So we've already got that historical infrastructure
Hmm.
in the at the mine site, and that also gives us a really good social engagement, because all of the towns, the four towns that are sort of, the closest town is 25 kilometers, but there's four towns that
Okay.
we draw our workers from. That gives us, not only do we have the infrastructure, the legacy infrastructure,
Hmm.
which just decreases our capex, but we've got the legacy positive attitude of the locals. So our social engagement, we're not starting from scratch, we're starting from a positive social engagement. And being where we're
Hmm.
located in southern Mato Grosso, we're not in any sensitive rainforest areas. This is pastoral land.
Hmm.
For all intents and purposes, it's a brownfields restart on a field that was barely ever mined.
Hmm. Okay, super. So, what is the relation of copper, gold, silver at Cabaçal? Because copper is one thing. I mean, we heard it from Robert Friedland last week that copper for the next decades is something which would be in super high demand, and we are missing copper mines. So, you guys have the right metal there.
Oh, absolutely. Caba's a geological evolution which is incredibly unique. So we've had that first phase of copper, gold, silver mineralization from volcanic massive sulfides. Um, and then what we've had is a second episode of mineralization that's come through and overprinted that copper, gold, silver sulfide mineralization with veins of very high grade gold. We've had veins going some 26 meters at 20 grams gold on cutting the copper, gold, silver VMS mineralization. And that's really important because that means we're enriching already very valuable rock.
Hmm.
And it's not that copper, gold, silver, and the gold overprint is not restricted just to one deposit. we see that signature now quite clearly over 12 kilometres of the mine corridor area, but we expect that this overprint is very likely to be across the 50 kilometres of continuous tenement that we have. And as I said before, our upside is not what's below the pit at 200 metres, what's 300 metres below surface. Our next upside, like say Santa Elena, is the next mineralisation at surface. Now, St. Helena is 9 kilometres away from Cabaçal, but in between, which we call the mine corridor, we have multiple occurrences and prospects of copper, gold, silver.
Okay, so you said in Q1 will be the pre-feasibility. What would be, let's say, the path finally to construction? Because I could imagine that a project like that should be really built with $180 million. That's really nothing, right?
It's well, as soon as we complete actually in advance of the completion of the pre-feasibility study, I'll already preparing the tender documents to launch the feasibility study straight after the pre-feas is finished. There's certain prospects that a mining investment professional like myself, I was a partner in the Centent Equity Partners, and we managed several billions of dollars. Some projects you can look at them and just say, look, this is going to get built. Every analyst that we bring down to site, they all go, yeah, this is going to get built because it's got location, metallurgy, metals. I mean, copper and gold in this market, open pittable. What an opportunity. And the people we are building in Brazil. So we will go straight into feasibility. We'll complete that at the end of Q3 next year. That's our program. And we actually brought this project onto the horizon of the project finance banks probably about a year ago now. And so everything we're doing is really to address the risks of the risk committee, the risk that the risk committees of these project finance banks will look at. So we don't have to go for expensive mezzanine finances. We're going to go for straight project finance, which is, say, 65 debt, 35 equity. It's a very conventional. Often I've seen projects that struggle in the conventional project financing, or they don't have the team that can build a mine like this. They go for the mezzanine, the stream, the offtake mezzanine finance. We're just going to go for straight project finance.
Okay, super. Okay, so Cabaçal is on track, absolutely. Only 10 kilometers away is Santa Elena. And you just brought out a press release that you guys, you drilled, or the 500th hole was drilled there. Congratulations to that. So what Santa Elena looks like the second mine to me.
Well, Santa Elena is like a little jewelry box for us. It's 9 kilometers away. It's 3 times the grade of Cabaçal. So we've actually published an exploration target for us, which is somewhere between 3 to 7 million tons at between 3 to 3.2 grams per ton gold equivalent. And when I talk about equivalents, always understand that's post-metallurgical recovery. So that gives us up to some nearly 760,000 additional ounces that will then be fed through that economics of Cabaçal. So Cabaçal with the NPV of 573 and the IRR 58.4%, those economics actually exclude the future contribution that St. Helena will give to the economics. And our plan is for St. Helena to be in the feasibility study next year.
Okay, super. I saw also there a photo in your presentation that there is a previous flotation plant. Can you still use something of that, or is that already too old?
No. It's like a Cabaçal. What we have is a flow sheet. This is how they extract the payable metals. What we found interesting in St. Helena, as you can see on the presentation, one side is the zinc, one side is the brassy gold, copper and gold. What we have done at Cabaçal is we're going to have a gravity circuit which recovers 30% of the gold. And in our exploration target, we used the flow sheet from Santa Elena for the exploration target at Santa Elena. And that excluded a gravity circuit. So we think there's potential for another 20 or maybe even upward 20, 25% of additional gold recovery when we actually take that original flow sheet from St. Helena, and we've actually
Yeah.
done the tender now. We'll go off to Canada to SGS, and they'll optimize that flow sheet, but also include a gravity. Because when we looked at the tails grade at St. Helena, it was going over a gram gold. And from the historical data prior to that, we could actually see they could recover coarse gold. So it was a little bit of an oversight on the previous operators.
Okay, super. So what is the plan then there at Santa Elena? Maybe it's a little bit behind Cabaçal, but when can we expect, let's say, the next study? I don't know, pre-feasibility or something like that?
For St. Helena, we'll put out a resource, almost certainly in
Hmm.
Q4 of this year. And then it will then be part of the optimization of economics in the feasibility study. And
Hmm.
with Cabaçal being the hub, okay, that means all of the peripheral deposits don't really have to go through a detailed PFF, a PEA, PFS financial study. Once you have that mill up and operating and we pay it off in under a
Hmm.
year, all the other
Hmm.
deposits, you're just going to do basically an operating, a pit shell, which is going to be determined on um, ex, operating costs for mining and then
Hmm.
the milling cost and the cost to transport to Cabaçal.
Hmm.
So all those other
Yeah.
prospects, Sagari, Sakuri that you'll see in the presentation, none of
Hmm.
them have to cover or carry capex to build a mill because the mill's already been built at Cabaçal. This is what's so unique about Meridian and the Cabaçal project.
Hmm.
Our economics are not wholly dependent on each prospect trying to have to carry its
Yeah.
capex. We've already got the capex paid off in the first 12.
Wow. Okay, well, that sounds fantastic to me. One other question, how does it work then with permitting? Do you only need permitting for Cabaçal, let's say, as the real hub for the production, or do you have to permit each other spoke in addition?
Yes.
How does that work?
You have to permit each project. And
Hmm.
we actually started the data collation for Cabaçal because we back in December of 2021. And because we already had within reason what the flow sheet was going to be, where the open pit potentially was going to be. So we could
Hmm.
actually commence the collation of data for what we call the preliminary license. And we actually submitted that at the end of last year. And that would, we expect the passage of that to occur within 12 to 14 months. Now,
Hmm.
at St. Helena, we've already started now the data collation and we'll submit our application for the PL shortly. So what that means is, even with Cabaçal, we've got a mine life of in the PEA of some 20 years, but we'll reduce that to 14 years by increasing the throughput. We have got so much existing material and mineralization to potentially put through the mill that we're not rushed. We don't have to, we have to get this thing permitted. We've got the time. And we've also, with the net free cash flow, we can continue to develop these other prospects.
Okay, super. So I would say that's what once it's done, it's going really smooth. I
Yeah.
would say that's why I'm a shareholder also of the company because I like the concept, to be honest. Um, how do you rate these days now the M&A activities in Brazil in the gold copper sector, for example? Aren't you a little bit in fear that somebody might come and grab you? Because with that setup you have, this is a perfect scenario for somebody saying, hey, you know what? I take those 200 million or whatever, let's say the 100, 180, but a little bit more, and make it happen.
It's a really interesting discussion there. My history has always been as an equity manager with the private equity funds. So we have a board of very experienced mine builders, mine operators, and fund managers, and so forth.
Mm-hmm.
Um, and we have a share registry now of some quite large funds. I mean, funds that are measured, their assets under management of 1.x trillion dollars. The big funds are involved in this company, which is very surprising for a
Mm-hmm.
small company, but the risk suits them. Um, so we know what the value of these projects are. So we don't have any underlying environmental liability to discount our M&A valuation. We don't have any stream or royalty, third-party stream or royalty, which discounts the value of the equities. I'm an equity manager, and I'm so focused on the value of the equities. At the same time, we are well funded. So unless there's a valuation in an M&A, which is in line to the long-term value of this prospect, which could well occur, it's not going to be a discount transaction. That's what I'm getting to say.
Definitely not. I hope not.
And
That would not be positive.
you have to, and I've been to several conferences and I present to people, and for 10, 12 years, I was on the other side of the table listening to people present to see if I was going to invest. So my view is the values of how I see the value proposition, the value growth proposition of our equities. We're trading at about 0.15 to NAV now. On economics, when we come throughout the next 12 months, they're going to progressively improve, not only through the improvement in the commodity prices, but the increase in the resource base with Cabaçal and Santa Elena, and then get a valuation for the exploration potential that we can very much see ourselves following, great companies like G Mining and other groups are now trading at 1.05 NAV, or like Foran that's trading at, I think, about 1.3 to NAV. So really, the multiple proposition we're presenting to the market today is extraordinary. And as we just chatted briefly on before, May and June were always going to be flat months. We absolutely called that. But I see tremendous opportunity in Q3 and Q4 with the base, our primary commodities of copper and gold.
Yeah, definitely. Me too. I mean, I have also my next target in gold is 2,750, and I think we will see that quite soon, meaning this year. And also, my feeling is copper is good for $5.50 to $6 within the next 2-3 years.
I think that copper, don't know what it is in but I spoke to a very knowledgeable person in London, and I fully support his view that copper could probably even go up to $14,000 a ton, $15,000 a ton, and then settle around $11,500, $12,000 a ton. Above that, you get some substitution in some of the countries. But when we look at the growth of copper, there's a really interesting report that you can download from the IEA on copper. I actually think they got it wrong in respect to India, because India per capita usage for copper, I think, is 0.6. In Europe, it's 3.5. In China, I think it's 3.8. And the recent drive in copper and the decrease in the TCRCs was largely driven by that giant copper smelter being built in India. And I don't think it's going to be sufficient. I think it's going to have a capacity of 1 million tons of copper.
Yeah.
I don't think it's going to be enough for India. And us, the belt-scale project of copper, we will never fill the volume, but certainly we'll present to them the perfect blending material for any low grade or dirty copper concentrates they'll need to buy.
Fantastic, super. Also, that looks to me like the next 6 to 9 months will be very huge for the company, honestly. And I have also a good feeling that we will have a good news flow steady on. Huh?
Yeah, very much so. I always recommend to some of the smaller investors, and even to our larger investors, that this period coming up in July, August, it's always a very quiet period, but I think it's a very opportune period for people to come into the markets, buy some liquidity, buy a position in the company, expecting it to actually grow. We saw it trickle up with the copper price and the gold price. We got financed. We're well financed with over $20 million cash on hand. You'll see that in our Q2 financial statements that come out next month. Really, what we should see is a tremendous opportunity for genuine wealth creation via Meridian's equities.
Absolutely. Super. That was a great final word. That's why I'm a shareholder. I said it already. And Gilbert, thank you very much. That looks all great. And look forward to our next talk then. When you have some more results out, Q2 out, etc., then I would suggest we do an update here.
Absolutely.
And I wish you well. Thank you very much. All the best. Enjoy the summer.
Okay. Look, if anyone's got a query, please just send it to info@meridianmining.co. Come straight to me.
Exactly. Super. We'll do so. Thank you. Ladies and gentlemen, that was Gilbert Clark, the CEO of Meridian Mining. And you heard it. This is gold, copper, zinc, silver in Brazil. They have a 50-kilometer VMS belt, 2 fantastic projects. And there was mining already. But if you look at the numbers, that looks really fantastic. And I'm absolutely not worried about the PFS coming out for Cabaçal in the first quarter next year. I think those numbers will be fantastic. But because what we have seen so far is calculated in such low low basis, that this will really do a jump. I have the really good feeling on that. And copper is the metal of choice, not only for this year, but for the next, I would say, 2 to 3 decades. Don't forget, India is the new China. And when they start really to grow further on, we will see very, very different copper prices than today. Even copper prices, a lot of people cannot even think of. And gold today hit an all-time high. So this will move also further. And I have a very good feeling that with silver, this will move also next. So make sure you have some Meridian Mining in your portfolio. I do, because I think it's a great opportunity. I like Brazil as a country for mining. They have a fantastic setup there. They are financed. They have good shareholders. There is a good infrastructure. I would say everything is in the recipe. So let's do some bakery here. Looks great. Thanks for watching us, and bye-bye from Austria today.